Hotaling, it's Hotaling, right?
You could call it whatever the hell you want. As long as we're doing insurance, it all works. So, hey everybody, appreciate the time. I'll try to be brief since I've talked to a bunch of people so far this week. So our firm, our quick 2 seconds, is we're a risk management family office. So our bread and butter, we've been around for 20 plus years, which means I started it when I was 4 years old. We primarily focus with oil and gas, energy folks in the real estate side. We're based out of Houston, but we also have offices in New York City, Miami, Fort Lauderdale, Nashville, kind of all across the country and right in all 50 states. And our bread and butter has really been working on complex risks with entrepreneurs that are kind of closely held companies between, about 10 million in revenue up to about 500 to $1 billion. So with that, probably about a year ago, I was at a separate conference that had nothing to do with Bitcoin mining. And if anybody in this room knows Marshall Long over at Rhodium, one of my clients is best friends with him. So I was there with my wife, our 2 dogs, and meet Marshall. And if anybody knows Marshall, he's not the most normal dude of all time, but he's phenomenal. And I meet him, he shakes my hand and goes, "What do you do?" I go, "Insurance." He goes, "Huh, what's the name of your firm?" I go, "Hotaling." He goes, "That's a stupid name." He goes, "Your dogs are cute though. If you call it Fluffy Dog Insurance, I'll talk to you." And that's how I met Marshall. So he is one of the chief engineers for Rhodium, which was about to go public. They probably have over $500 million worth of equipment, very, very large mining operation, and they're doing a great job. And I had known a little bit about Bitcoin, obviously, or, at the time I knew a little bit about Bitcoin, knew a little bit less about miners, but I understood the fluctuation correlating between price of Bitcoin and price of miners. And obviously, you buy a miner at $10,000 when Bitcoin's at, 30,000. And if Bitcoin goes to 100,000, well, the replacement cost of said miner, if it were to break, obviously drastically increases. And then the opposite occurs should Bitcoin go down. And just from an academic standpoint, I asked Marshall, I go, how the heck do you insure that variance? And he goes, We cover it in dog shit, and then somebody sells me more dog shit to put on top of the existing dog shit. And I go, huh, okay. And that was the end of the conversation. And then just the insurance guy in me started twitching on the way home. And I said, God, if he's having problems and he doesn't feel like he loves the program that they had at the time, I wonder what else is out there. And that kind of started me going down the road of about a year trying to figure out what was in the Bitcoin mining space relative to risk management and insurance. And as some of you might have found out, that answer is not a lot. So really what we started down was basically providing and building customized Bitcoin mining insurance solutions, where we can truly provide coverage kind of tip to tail for a Bitcoin miner, either on-grid, off-grid, solar, renewables, anything that you guys want to do, where we're able to provide, general liability, the traditional property coverages, workman's comp, business interruption, and cyber liability in case you ever get, jacked, if any of the machines get jacked and they're sending to, a different kind of wallet. And that's been a huge endeavor for us because, we've worked in the oil and gas energy space for a long time. We understand that. Insurance is really designed for stuff if you drop it on your foot, it hurts. And that's what we've always felt that, with a Bitcoin mining operation, it's a data center combined with a bank combined with energy. And when you really kind of have somebody that can understand that and explain that to an insurance carrier and kind of lift the veil on what they believe to be kind of opaque, the actuaries at insurance companies can get really comfortable with this really quickly because you guys track things on a minute-by-minute, second-by-second basis. You have very low claims ratios because you're so diligent in every single setup that you guys do. And it's only going to get more and more improved and more efficient. So that's been some of the things that we've been working on right now. And it was phenomenal because I spoke at Empower, which, the Digital Wildcatter guys did in Houston. And that was one of the first times that we really kind of started talking to the public about it. And since then, we've been able to work with probably about 70 to 75 miners that we've been able to underwrite and bring on board in the span of about a 3-4 week period. And why I'm really excited about that is because in this sector, if we want to legitimize it and continue to grow, well, we want to have financing, right? And if anybody's ever worked at other companies, whether it's, real estate, construction, et cetera, you want to go get a $50 million loan to build a project, the first thing they're going to say is, okay, here's your insurance checklist. And to be able to check those boxes and know that whether you're doing a private equity deal, private raise, GPLP, or you're just going to do debt financing to go buy and grow, for those investors or financiers to know that their investment is protected, whether it's in transit, whether it's in setup, that's a legitimization step. And that leads to basically bringing down the interest rates on some of those term loans, being able to generate more capital, because now you're, again, making this more commercialized in an industry that, really needs that if they want to continue to expand and make that happen at a breakneck speed. So I think that will truly kind of help, where everybody's going and growing into, and we really want to be a partner in that. And then for, two programs that we have up and running as well, they're probably going to be kind of for your over, 50 to 100 megawatt facilities. This was another just stupid smart idea that we had worked on, was relative to, business interruption. I always felt that was the easiest thing that, we could insure, right? Business interruption is if your, mining facility gets shut down for 10 days, what your revenue replacement would have been, right? So you think about it, your hash rate, your uptime, your electricity, and what the price of Bitcoin was if we go backwards for 10 days. And you could pretty much figure out what your margins would have been and what we could replace. Pretty straightforward. But the real caveat was, how do you ensure the price variance of miners, right? How do we ensure the replacement cost? If I'm buying it at X, but then X could go up 3X if the price of Bitcoin truly rises, but it could also go down. And the hedging costs on that just don't really exist. So you have that in the energy markets where, insurance carriers are always working with oil and gas or natural gas providers on how you can hedge. And when talking with a couple actuaries at carriers, I found it curious that, when I would always talk with Bitcoin folks, they would talk about, hey, I'm buying this mining rig and it's costing, $14,000, et cetera. And finally, it just kind of dawned on me that they're just pricing it in the wrong currency. Why are we pricing things in US dollars? Why don't we price it in Bitcoin? We're insuring a Bitcoin fluctuation risk. So what if we could pay our premium in Bitcoin, self-insure, and set aside our reserves to pay claims in Bitcoin? You no longer have price variance. So if you change the denomination, you remove the risk. And if I'm an oil and gas company, well, if I could give you, hey, I'm going to pay my premium in 250,000 barrels of oil, well, yeah, then I could denominate that risk. Or I could give you 100 tons of gold, but that's not actually able to do that because of physical storage for obvious reasons. But in this, I could hedge my risk with one click, and you get it in 7 seconds. And then what we'll do is we work with somebody like Parker at Unchained, where they can be that professional custodian to hedge or to hold where that claim's ability is. So now when there is a claim, we verify it with the insurance carrier. Client has a key, carrier has a key, Unchained has a key, and now that claim's money can be released to pay a claim when the carrier verifies it. Unchained, you get 2 out of 3 keys, it gets released back to the client. So the benefit on the self-insurance side, or what they would call like a captive model, is you're essentially putting away that money for yourself at a pre-tax basis, and then you're managing your own claims. So if I'm ExxonMobil, I don't pay $1 billion of premium to rent my insurance, and then if I only have, $100 million of claims, I just gave away $900 million. I'm going to put away $1 billion on my self-insurance side of things, and then I'm going to have a team that's going to manage my risk. So if I only pay $100 million of claims, well, then I get to keep that extra $900 million. And that's what we're working on, is really kind of continuing to legitimize the industry and bringing, more instrumental vehicles for that. Also at a larger scale, we're working on and have rolling out in London, or through the London markets, a 1-year replacement warranty for anybody that plugs in on immersion. So as of now, if you're plugging in on immersion, you're obviously voiding your 1-year warranty. At scale, we're able to do that. Not necessarily going to be on a one-off side of things, and it's not going to be something that is going to happen every single time. But for the right kind of risk, and when done correctly, we can do a replacement warranty, which we find is going to be very powerful for the folks that are hosting, to be able to offer that and be able to deliver that cost to the folks that are plugging in with you. So that's just kind of the high level of what we're doing. And I'll just obviously stay on stage, and any other questions, we have a booth over on that side. We're the one that has a bunch of green stuff everywhere. And hope this was the least boring insurance presentation you've heard in a minute.
That's brilliant. 1 Bitcoin equals 1 Bitcoin. That's the way it should be. That's really great. Does anyone have questions while he's up here?
Dan, that was a great presentation on insurance.
Thank you.
Yeah, new topic. Yeah,
First time you ever said that, huh?
yeah, I believe so. So for the investors' perspective, I heard that a few of our friends have asked how to bring investors on board to invest into mining, right? How do you present the insurance aspect of it to have them some peace of mind that their money is secured? Is there something that you can do on that?
So you're saying that when capital's coming in, how to give them the peace of mind?
Yeah.
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 So like anything else, right? Like when capital's coming in, they're going to have their legal team look at it, right? And legalese, an insurance contract is just basically a legally binding document. It's pretty dry stuff. So it's going to be the strength of the carrier, and it's going to be the strength of the language. So for us, where we spend a tremendous amount of time is making sure that what you guys are doing at your particular sites, the air filtration, the immersion, all the different technologies, they're categorized, they're picturized, they're explained in all these documents. So that way, when there is a claim, the miners are classified correctly, and the chances of the claims are being paid out are going to be very high. So basically what we're providing is, hey, here's a copy of the coverage. Read through it and tell us where we're wrong. If you don't feel comfortable with something, you want us to add it, great, we can do that. That's what amendments are for. It's a conversation, not a demand letter. So that's where, these are kinds of things that are always important, because we want it to be fluid. Like, we're not here to be like, hey, by the way, we have this shiny widget, buy it. We're more about, hey, let's have this conversation. What's important to the investors to make sure that we have? What's doable? What's not doable? What's something that we want to scale into? Because when you think about it, miners that have been around for 4 years, it's like, oh my God, they've been doing this forever. And from an actuarial standpoint for insurance carriers, they're used to pricing risks that have been around for 100 years. So it's really understanding that we want to get certain things for the investors. They want to check certain box, but then we also got to make sure that, they understand what they're investing in and what's going to be actually attainable, and making sure that that kind of constant communication happens. So it's like, if you're asking for this, we could get this, but our goal is in a year to get back up here. So if that helps, really it's just kind of a moving target, but we want the investors to communicate, or you to communicate, what you feel like is needed, and then we'll work our tails off to get that included in the documents. Damn it. Yeah, I don't know, but it's definitely a dick move. So anybody else, anything? If anybody has a napkin, that'd be great too. But if not, appreciate it, everyone. Thank you so much.